Awareness. This is Sherman Dahl. Thought I would take a few moments today. We had another really choppy day in the stock market, and certainly one thing that comes up with our listeners on a regular basis is how do you make money when we're in the middle of what appears to be a stock market crash? Well, I thought I would take a few moments today, try and build some awareness as to, what's going on in this world of investing, and in particular talk a little bit about some of the strategies that you might want to think about in order to make unusually high rates of return when the markets are gyrating the way they have been for the last number of months. One of the first things I think that investors have to be aware of is that interest rates drive absolutely everything. And I often think of interest rates as sort of the price of money. So we've had unusually low interest rates for a number of years, which is not usual for the North American experience. So what we're starting to see is interest rates starting to move up, and they're not even moving up that fast. But if there was going to be an interesting trade, you might want to say, well, I would short the long bond market and I would go long stocks. In other words, there's a very high probability in this kind of an environment with rising interest rates and inflation that stocks are going to outperform bonds. Having said that, where most of the fear is coming from is actually owning stocks, which brings us to a really important reality when it comes to investing in stocks, is that you really want to be greedy when everybody else is being fearful, and fearful when everybody else is being greedy. So the net result of that, from a thought point of view, is the very best time to buy stocks is when everybody else is scared. So what that really means is that as an investor, you really have to be able to manage your emotions. And some people are just not suited for investing in the stock market because of the need to be able to manage the emotions. Because the last thing you want to be doing is when the stock markets are falling, you're selling stocks that you've paid 50 cents for and you're blowing them out for 20 cents. Well, that would be considered somewhat stupid. So it's really important as an investor to get your head around what's actually going on in terms of managing your emotions and knowing how it is that you're going to be able to make money in stock markets that in particular are gyrating. So, I also highlighted that interest rates govern everything. So that's what's driving all this uncertainty in the market, not to mention all the other things that are going on around the world. So it's not a big surprise that the stock markets are starting to correct. But here's the thing. How do you go about making unusual rates of return in a situation like this? Well, the fact is that it's actually easier to make high rates of return when the stock markets are falling. Let me give you a couple examples. And we've talked about this and we've interviewed the CEOs for the benefit of all of our listeners to try and build awareness. Let's just take one company, for example, or even two companies, but two companies that really stand out for us are Pan Global and also Northern Graphite. And I've talked about both of them. Pan Global is PGZ is the symbol, and Northern Graphite is NGC is the symbol. Both of those companies are now trading at significant discounts to what we believe is the true value. And on top, and part of that is because the markets have been fearful. So people, because they're scared, have been selling off overall their stock portfolios, which drags really good companies like Pan Global and Northern Graphite along with that. So both those stocks are trading around the 50-cent level. Well, both of them even in the last year, have had highs much higher than that. In other words, they're already trading at a discount. Not to mention the fact that the fearful market has lowered the price of those stocks. The companies have actually dramatically advanced what they've been doing from a business point of view. Both of them have a significant amount of cash. Both of them have relatively low market caps, and both of them are executing on extremely solid business plans. In the case of Pan Global, they're developing a significant discovery in the Iberian Pyrite Belt in Spain within the copper space. So just think about this for a second. So you got the world that's becoming very scared on short-term prices in the stock market, but you got a world that's continuing to grow, and you've got electrification creating massive demand for copper. In addition to the massive underlying demand for copper, you've got a limited supply of copper because there hasn't been a lot of investments in new copper mines. Then you look at this company, Pan Global, which has a significant discovery of copper, has, $15 million in cash, is drilling, has 3 drill rigs running. When you really look at the underlying investment, it's extremely attractive and it's significantly on sale. The same thing happens with Northern Graphite. We look at a company has transformed over the last number of months, which is going to be lining up to be the 3rd largest graphite producer in the world outside of China, and has significant discount to its what we consider to be an intrinsic value that's much higher than it is today. And both these companies are run by very capable management. They're very well structured, and again have overall low market caps. And so here they are trading at a discount because investors overall are worried about a stock market crash. So it's actually the market correction and the fear of rising interest rates and inflationary pressures and wars in other parts of the world that are actually putting these stocks on sale. So, I guess the takeaway is that stock market corrections happen. They happen time and time again. It's up to you to manage your emotions and manage the expectations and manage your own research and looking for really good quality companies that are available at really good prices, which now are, in many cases, 50-60% off. And so it's up to the investor to be able to take advantage of that and then be patient. And so with rising interest rates, you don't want your money sitting in the bank. You probably don't want to buy long bonds. What you want to do is find a really good quality stock like a Pan Global or a Northern Graphite or a diversified portfolio, the S&P, and over time you will do well as an investor. So thanks for taking the time with me today. Just trying to build an awareness of how you can properly invest your hard-earned dollars and some of the great companies that you can look at, and have fun out there. Even though the stock markets are all over the place, you have to think of that as an opportunity for you as an investor to buy things on sale. Have a great day, everyone.